My friends, I'm so honored to introduce our keynote tonight. Financial exclusion is a global problem. 1.7 billion adults lack access to even a basic savings account. Over the past 15 years, Kiva, a US-based nonprofit, has worked to debunk the myth that poor people are not creditworthy by facilitating over $1.5 billion in microloans in 94 countries. Chief Strategy Officer for Kiva, Matthew Davie, will discuss Kiva's history, the systemic challenges that prevent poor people from accessing financial services, and the efforts currently underway to leverage emerging technologies like blockchain to build an inclusive system for the future. Matt, where are you at? All right, come on up.
Thank you. I'd like to start. Who here, before you got the email, had heard of Kiva? Awesome. See you later. That's my only joke for tonight, I promise. Okay, really quickly, I'm Matthew Davie. I live here in Bend. I've been here the last year and a half, originally from San Francisco, where Kiva was founded 15 years ago. As Chief Strategy Officer, my job at Kiva is to look at what are the things we can do to leverage what Kiva has done for the past 15 years to actually bring a lot of impact over the next 15 years. So I spend a lot of my time, we'll talk some about blockchain today, we'll talk some about big fund managers and getting JP Morgan to deploy money to Uganda. But how do we actually go and solve the problem that this 1.7 billion adults, 37% of the world's adults population, is completely invisible to the banking sector, doesn't even have a basic savings account. I figured I'd start and give you a quick walk down of what it's like to be financially excluded, just having been to a lot of these countries and met a lot of the borrowers. Then I'll talk a little about Kiva and then some of the initiatives we have going to give you kind of the lay of the land, and it'll be like a little condensed masterclass on here's what's going on in the unbanked world. So being unbanked, it's not just about you don't have a savings account. Like, try to think about your life if you didn't have access to a credit card. Try to think about your life if you had to operate entirely in cash. Try to think about how you pay for your kids to go to school, how you pay for healthcare, how you pay for health insurance. How do you save money? How do you send money to someone else? People think it's easy to transact in cash. It actually, the average cost to send $1 in the unbanked world is 7%. So imagine trying to work in a village or in a more metropolitan area and send money back to your family in the village, and you lose 7% just to send the money. And that's the average. A lot of them are losing 15%. This is life in the unbanked world. And the challenge with it is that the system is broken, or the system is not broken, the system's not completed. That the system, the global financial system, doesn't have an off-ramp for people to get out of the unbanked world and an on-ramp to get into the banked world. And I like to use this anecdote from a rural village outside of Nairobi, and I'm gonna call her Nancy. But this woman, Nancy, who's been a Kiva borrower for 11 years, she's borrowed $15,000 through our microfinance partners. Perfect repayment history. Rain, snow, earthquake, whatever natural disasters come her way, any family emergencies, every month she has repaid on time. A lot of times you can measure wealth in agricultural communities by the number of cows. So she started off with 1 cow. She did some loans to get a 2nd cow, sold the milk, paid off the cow, got a 3rd cow, bought some land, built a little shop on the land to actually be able to sell some stuff and buy, supplies like a little hardware store. Now she owns a bigger plot of land right next door. She wants to build a house. She lives with 3 generations of her family, her parents, her, and her kids. It's like 16 of them total. If she can build on this property, she'll be able to build a bigger hardware store on the 1st floor, a flat for her and her family on the 2nd floor, and a flat upstairs to rent out. If she does this, her daughters go to school because the rent from the top floor will pay for her daughters to go to school. If she doesn't build this, her daughters won't go to school. So here's the conversation that plays out with our Kiva person in the field. Well, Nancy, so you went to the bank and clearly they're gonna let you build on this. You have perfect repayment history. Oh, no. I'll die and that land will be empty because I've gone to the bank. And when I get there, they say, I know you, Nancy. I know you've lived in this village your whole life. I can't understand your credit history. I don't know, I know that you're bringing me these papers that are saying you have this perfect repayment history from Kiva, but I can't take those. I don't know if you just went across the street to another bank and opened a massive credit line there, $5,000 there. I don't know if you're cross-indebted. There is no path for the Nancys of the world, even when they're really, really good actors, to get treated that way. And not only that, where Nancy is in the microfinance sector, she's paying 60 to 100% APR. So that's the unbanked world, and it's less and less about money. It's more about, think about the agency you have because you have money and because you have access to convenient, secure, fast money. Payments are like the least of your concern. Kids going to school, healthcare, housing, personal security. Okay, so Kiva, now let me get a little more optimistic. So Kiva's been working in this world for 15 years. We've worked in 94 countries. We're currently in 83 of those 94 countries as of yesterday, I checked. We're not in Syria for obvious reasons right now. Over that 15 years, we've deployed about $1.5 billion US. It's from people just like all of you sitting in this room. Actually, how many have done a Kiva loan in the past? Thank you. If you haven't relended money, go relend the money today, please. It's sitting there doing nothing. Look, we've operated with lenders like us in the room, going and funding loans, and then we work through microfinance partners in these countries, specifically so that we're building their capacity, that people who live and work in the villages, who serve in cash, they drive scooters with cash out to villages and transact with people and write it down in a notebook, that builds their local capacity. And then over the next 12 to 24 months, you get monthly repayments back, where the cash goes back to the person with the scooter, they write it down in their notebook, the cash makes it back, and eventually the money gets back to your Kiva account. And I would say the most important thing we've done with that very, very risk-tolerant capital is work to debunk the myth that unbanked populations are not creditworthy. And you said it best in the introduction, but it is a fact. Kiva, 15 years, $1.5 billion, 94 countries, including Iraq and Syria, less than a 2% borrower default rate on our loans. That's better than US credit card defaults. What's your US credit card rate? 15 to 25%. If you decide to not pay it off monthly, they're paying 60 to 100%. And it's not to go from a BMW to an Audi or an Audi to a BMW. This is to send their daughters to school. This is a medical emergency and like, I fell off a scooter and I need dental work. I need it today. And so the first observation I wanted to share with everybody is that there is a stigma around unbanked and poor people and underserved populations, that there is a reason that they're poor or that they should be treated as high risk. They are not. I can give you tons of data. Pick your population. Pick women, pick border populations, pick refugees. Refugees actually have a lower average default rate than that 1.8%, Syrian refugees in Jordan. So that's the first observation. The second one, at the same time as we came up with that, looked back at 13 years, this is about 2 years ago we started looking at this, we also looked and said, and we're one of the biggest players in the space and we're barely making a dent. We're moving a couple $100 million a year, but the problem's just getting bigger and bigger. We're never gonna get to 1.7 billion people out of just charity, out of people like you and me in the room, $25 at a time, deciding to give 0% interest loans to try to encourage lending to unbanked populations. So one of the first things we started doing is saying, we need to get capital flowing. The big challenge, what is it that's blocking financial inclusion? And what it really is that there's trillions of dollars over here sitting in Deutsche Bank and JP Morgan and HSBC, and there's 1.7 billion people over here who are never gonna access it. And what's blocking that? And if you wanna know what's really blocking that, the problem is, one, they're physically not connected to the banking system. And that's because the banking system and the digital banking system was built on top of copper wires and brick and mortar bank branches. Now that's changing with digital, especially if you go to sub-Saharan Africa and Southeast Asia, and especially if Elon is successful with Starlink, or if Google Project Loon or Internet.org actually work at a global scale, suddenly connectivity, like physically or digitally being able to connect to a bank, is gonna become ubiquitous. They're gonna get an internet connection from Elon's Starlink satellite, and they're gonna get a $40 Android tablet for the whole village to use on their little solar power cell. They're connected. Great, so Deutsche Bank's gonna say 2% default rate, 60% APR, I wanna deploy $1 trillion here and make a lot of money. Not quite yet. What's still missing then is proving that it can be done. That those, the big banks who have the capital to do this, they have to pass a know your customer check, to make sure you're giving the money to who you think it is. And there's a bunch of anti-money laundering and countering the financing of terrorism rules that make it really hard to get to these people. They need a verifiable identity. Try to open a bank account using your gym card. That's the corollary of what happens in the unbanked world. They have a village card, you can't open a bank account with that. And then try to pass an anti-money laundering check. Try to move $1,000 even in the US. Unless you're doing it in cash, it's really hard to do it if you don't have the right institutions on board. So we're doing two things to address that at Kiva. One is we've stood up our own big fund manager. So we're working with Soros, who's one of the biggest fund managers for refugees. And we're actually deploying a $30 million fund starting next year to move big money to refugees, Syrian refugees primarily in Lebanon and Jordan, also some displaced populations in Central and South America. And the entire point there is to prove that big money can do this, so that big money is not afraid to do it. And that's exciting, and that's taking off. That's really, really important. We have to move. I mean, just sub-Saharan Africa, if you just wanted to include the people who make $2 a day there, you're talking about $1 trillion that you need. So we have to start getting a snowball going so it can gather some momentum. It's about $2 trillion globally that you need, based on various estimates. The second thing, and I'll get to blockchain now, we're a Silicon Valley nonprofit. We were one of the first ones to have a marketplace, like a crowdfunding marketplace. And it was to move money to poor people in India and then to 94 countries around the world. We looked and said, what could technology do to help solve this problem? And really what we found was, as digitization is happening, so as digital, I talked about internet connectivity and device access becoming ubiquitous, call it over the next decade, getting 95+% penetration globally, digital is gonna come in one of two ways. It will either come the same way it has been for us, which is when you go to prove your identity, you gotta bring 5 utility bills and your driver's license and maybe your passport just in order to open a savings account. Or we're gonna say, this is 2020. Maybe there's newer technology and we can skip a lot of this and actually bring cheap, secure, fast ways to prove who you are and to store your data. And by the way, to make it your data, not the government's data, because when you talk about a lot of the countries we operate in, you can't take for granted political stability. You can't take for granted that the benevolent dictator today, president, will be the president 2 months from now. And so this is how we got to blockchain technology, and I'm not gonna go super deep on it because you could spend 2 hours on blockchain. What blockchain gives you and what decentralized technologies give you is it assumes all the parties in the system don't trust each other. And so the entire human rights angle to distributed ledgers and to blockchain is, if I can find a way to bring trust into that system, to make it so that you could use this system to open a bank account. And I'm not talking about Bitcoin. Like, you don't know who you're transacting with in Bitcoin unless they decide to tell you. But if I could bring a KYC check, a know your customer check, like a bank account opening identity verification, to a system that allows no one to have to trust each other, that Syrian refugee, when they still lived in Syria, might have had a digital copy of their identity and of the fact that they were a doctor, and the fact that they owned this property and they had the title to the land, and they would have owned a sovereign copy of that data. And when they ran to Jordan, when they got there, UNHCR, the High Commission for Refugees that handles refugees for the United Nations, would not have to try to figure out who they are and figure out, are they actually a doctor or just saying that to me? They could actually, from how blockchain works, you can prove the provenance of the data and prove it hasn't been altered. So without calling Syria, without calling the university in Syria, without calling the government that's trying to persecute or maybe kill this person, they could actually say, oh, you can be a doctor in this refugee camp. Or like, I don't have to do the game that they do, which is like they get 10 people around and say, on 3, everybody say this guy's name, 1, 2, 3, and like 8 out of 10 say Matt. They're like, okay, your name's Matt. Like that's how they get your name. But they wouldn't have to do these things anymore. So let me take that back to Nancy. If this system existed in the unbanked world, and we use that system instead of the notebook that the guy on the scooter with the cash was using, still use cash, but if we just use this system to record, Nancy got $1,000. Over 10 months, she paid back $100 a month. When she got to that bank and went for the loan, the bank's problem was, I can't believe that this is all of your data. But what you could get from decentralized and from blockchain technologies is, without having to trust Nancy, without having to trust any of the institutions or people she's transacting with, you can actually trust the provenance of the data. And so if we do these things, I think it's possible we could actually connect, and I like to call it completing, because I don't think the system's broken, I think it's incomplete. I think we could complete the banking sector in the next 10 years and set the system so that by default, everybody is included. Because by default right now, everybody is excluded. It's on you to get into the system. And if we do this right, and if this digital wave continues to be real, and you see smartphones and tablets, and you see internet connectivity, and you put these types of human-centric technologies out there, I think in 10 years might be a totally different game. That JP Morgan would go, and I'll pick any bank, I'm not picking on JP Morgan, like Bank of America, where I bank, would literally be able to say, I'm going to Uganda not out of charity. I'm going there out of greed. And out of greed, I'm going to drive the rate, because there will be competition now. I'm going to drive it from 60% to 45% to 30% to maybe the floor is like 15 to 20%. It's hard. You're still driving scooters. But think about that. Think about what happens to Nancy if just her cost goes down to 15%, and then she can get the home loan, and then she can go and build on the property, and suddenly her daughters can go to school, and she doesn't have to take 60% loans to try to get her daughters to school. So all of this is happening right now. A lot of people think, and it's not just Kiva, there's plenty of folks operating in this space, but the things that are happening now with technology and the things that we think are kind of neat party tricks, like stuff I can do with Apple Pay on my phone, the technology behind that same exact technology behind how Apple Pay is or Android Pay is secure for like using on a Square card reader, that's the same technology that actually might help solve Nancy's problem. And that's the same technology that might make it so that in 20 years, like less than 5% of the planet is unbanked. And it's just those who are like choosing or are so far out that they're still off the grid. So I am eternally optimistic. There's no choice but to be optimistic when you're dealing with these numbers and something this big and hairy. I don't have much more to add other than if you think you've seen your life impacted by technology, what we're watching right now in the developing world and in areas that have been left behind so far, it's unbelievable. I mean, imagine falling asleep in 1989 and waking up in 2015 or 2020. Like, that is what is happening right now. And it's going to be hugely powerful. Thank you.
Q&A? Do I have any questions in the room? Thank you, Matthew. Any questions in the room for Matthew? Yes. What is the ideal balance between microloans and donations to sustain?
Yeah, so when you make a loan through Kiva, it asks you would like give a tip, and that tip is a charitable contribution to Kiva. And that is what has sustained Kiva for the past, for most of 13 of the past 15 years. I think it's a very personal decision how much you want to tip. I will say our cost to fill a loan, our cost to run these systems is between 3 and 5%. So if you want to say, hey, I want to make this loan to Nancy, and I want to make sure that Kiva can sustainably do this, that would be great, but it's a total personal call. Some people tip 100%, some people tip 0%, and people are kind of all over the board. But very personal decision. Every dollar does go directly back into making sure that we can get to the next Nancy.
Awesome. Any other questions? Yes?
When you refer that to 60% APR, who's charging that? Who's not charging?
When you're referring to the 60% APR, who is charging this?
This is the problem with talking about 15 years and 15 minutes. So we go out and Kiva gives loans at 0%. Now we go to we don't go and build our own microfinance institutions. We don't want to empire build. We want to be out there getting on the ground local, community sustainable financial service providers. So we go to microfinance institutions and we tell them, so here's the deal. I'll make an example of Cambodia. A couple of microfinance institutions didn't want to lend to border populations. We said, we will give you money at 0%. We will take the risk of loss. Our borrowers take the risk of loss. And you can mark it up to whatever you want to mark it up. But the catch is, you have to serve these people that you have a stigma on, that you think border populations are going to take your money, buy the water filter, and hop the border and not come back. And so we are the most risk-tolerant capital for those folks. And so when I say 60%, they're marking it up to 60%. That's covering their costs. Most microfinance institutions don't make money. It is expensive because it's not scaled what they're doing, but it gets them to go to that population. We remove the stigma, and this is the reason that we're now standing up a big fund manager, is then we want to move that capital onto the next unserved population. So with refugees, we've done a lot of work. We don't want to take that 0% money and go to the refugee who's already repaid 6 loans. We know that person's creditworthy. The microfinance institution does too. They don't need that 0% capital anymore. We want to get them bank-like capital where they're paying 3 or 6% because they know it's not a risky bet anymore. But that's where the 60 to 100% comes. And we won't see that fixed until there's competition in the market. And competition won't come until $1 trillion flows to sub-Saharan Africa.
Yes.
I more have a comment or an idea, suggestion. When I was 16, so I think it was your first year, my able to donate, and I've done it every year for the last 15 years we've been around. It was just a really neat gift from, so if you have grandkids, you're a godparent, you have nieces, nephews, it was just a really neat thing that then has kept a tradition in my life, and I've done countless loans.
Amazing.
And it taught me a little bit about lending, actually, when I was young. So
Come on up here, take the mic.
Yeah. Yes, a full validation. So this Kiva loans make a great holiday gift.
They do?
Did you pay her?
I wish.
You're hired.
I will say, let me make it quick.
Yeah.
I did actually order a bunch of $25 cards, and they're arriving tomorrow. So if you see me walking around Bend, if you catch me when I still have some of them, I promise starting tomorrow I will walk around with them in my pocket. Now, Bend honors code, you can only have one if you've never made a Kiva loan before. I don't want to be re-upping people who are already sold in, but if you haven't done it before and you see me around town, please tap me on the shoulder and say, hey Matt, I was at the PubTalk, and if I still have one, it's yours.
Okay, so where are you planning to be tomorrow? It's just
Hiding.
hiding, yeah. Good strategy, Matt. One more question. We have, yes.
So clearly digital identities is of interest to a lot of us. Are they going to take that? Are other institutions, healthcare, world healthcare, looking at what you're doing, giving digital identities to this underserved population and being able to help them maybe deliver medicines and tracking their diseases and whatnot, and getting more help to more people in a faster way?
Can we take our digital identities and start to scale this into the medical world?
Yeah. That's one of the really important things about, two comments I'll make. One is, if you boil down almost anything that's about delivering a product or service, identity is the atomic unit. You can't do it without identity. Identity of what the product is, identity of which light bulb is the smart light bulb, or identity of whose bank account is this. So one of the really important things we can do over the next decade is get interoperable identity. Right now, online, you got a Facebook identity, you got a Google identity, you've got a whole bunch of different identities. None of them talk to each other. Over the next 10 years, I hope we get a bunch of interoperable identities. If we did that, and Kiva's doing that, we're conforming to some standards that make it open and interoperable so that if Terry chose to share her identity to anybody, she'd be able to do it, and we wouldn't be able to do it for her. Only Terry could do that. But if we do that and we do it interoperably, then if Terry says, oh, I want to connect my health records, it's actually very straightforward technology-wise to connect those. If I did it in a silo, it would be like, no, this is your Kiva financial ID. So I do think you're going to see that. There's a lot of interest around the horn with how can identity be leveraged for all the things I talked about. Education, healthcare, property rights. Like you can run, finance is a very, very important one because it moves money, which can enable all those things. But all of those other things are what really drive impact. And identity is an atomic unit for that.
Awesome. Well, thank you, Matthew. So look for Matthew around town tomorrow and engage with him now this evening. And thank you for sharing with us. It's just absolutely fascinating and very inspiring. So thanks for being here. Thank you. Yeah, Kiva Loans. Oh, Matt, before you go, I have a present for you. Thank you, Aaron. Okay, Matt, this is our tradition. We give you the Edco PubTalk mug. You can bring this back to a future PubTalk. We'll fill it for free. You can share it with 10 of your friends. It's a very big serving.
You don't get a card, you can get some beer.
That's right. Thank you so much, Matt.